Ladies and gentlemen, welcome back. This is Christopher Aaron. Let's talk about a new market, shall we? Exciting uranium update. Before you leave, I just want to ask you a question. Do you intend to be an investor for the rest of your life? Yes or no? If the answer is yes, you must admit that there is going to be a time to diversify some of your precious metals profits into other markets. And so, let's be well-versed global investors with a focus on the unique precious metals. But when opportunities present, we should be paying attention to other markets, especially things that can't be printed out of thin air, such as other commodities. So, let's look at uranium in this update. Make sure to hit the red subscribe button and the bell icon so that you'll be notified when these updates come out on YouTube. And make sure to subscribe to our Twitter feed at iGlobalGold. Sometimes I post quick updates on there when I don't have a chance here on YouTube. The legal disclaimer, please make note. Thank you. Uranium market. Let's look at it. Wow, fundamentals, right? For all those people that say I never pay attention to fundamentals, well, here they are. Last 10 years worth of production data for the uranium market by country. Kazakhstan being the largest producer of uranium in the world. Australia, Namibia, Canada. So I would argue the majority of the world's uranium production is not exactly in politically safe jurisdictions, right? So how stable is it really if the market needs that uranium? That's a big question. But no matter how many questions we have, we can look at the net result, total world supply of production uranium coming to the market, and notice that over the last 10 years, it has fallen from 58,000 tons to 48,000. Pretty clear downward trend developing here, especially accelerating downward over the last several years. And the other thing that we can note is that the percentage of the world demand for uranium that is being produced by some of these mines has fallen in the last 10 years from 94% down to just 77%. So what if this continues for the next 10 years and we're down to only 50%? Where's the rest of it going to come from? The answer is the price of uranium is going to have to shoot upward in order to attract new investment into the sector, and the companies that find new uranium deposits are going to profit significantly in that kind of a backdrop. Now listen, I have as many reservations as the next person about some of the dangers of uranium. I mean, on one hand, we have uranium being labeled as a green energy, right? Because, well, it's sort of true because it doesn't produce carbon and fossil fuel exhaust, right? There's no carbon footprint, or highly insignificant carbon footprint for uranium. So on one level, it's cleaner. On another level, we have every couple of decades these disasters like Chernobyl or like Fukushima back in 2011. And that's horrible, right? But on the other hand, I mean, the world is not anywhere near a state where we are ready to transition to all renewable energies such as wind and solar. We're nowhere near that point. So there needs to be some sort of a way to bridge the gap. Maybe if within the next 10 or 20 or 30 years we can increase renewables, but we have to have something to bridge the gap. So what's really cleaner, uranium or fossil fuels? Look, we'll leave that discussion for another day. I just want to express to you that while I have reservations, I am also an investor in global markets, and I think this deserves your consideration here. So let's look at the price of uranium over the last 20 years and notice that the last time that we had this base resistance here that broke out in 2004, the price of uranium shot higher by 2,200%. This is not a typo. It went from $6 per pound to $140 per pound in just about 7 years. So what tends to happen in these commodity cycles is we move from vastly undervalued to vastly overvalued to vastly undervalued again, and then vastly overvalued once again in the future, because you get these cycles where everyone is investing in the sector and then it peaks and then suddenly all the mines shut down and little production is coming online, as we saw in that last chart, right? And so you get the price collapsing, and then that requires new investment to come back in again. It propels it higher. It would be nice if we could move more in a straight line, but commodity markets don't tend to work that way. It's just how it is. So after a 2,200% gain, the price of uranium then hit the peak in 2007, near the peak when there was all the talk about peak oil and the energy bubble, and we were going to run out of energy, right? That didn't turn out to be true, even though a lot of very smart individuals predicted it to be the case. Uranium then collapsed, had a bit of a recovery. Fukushima happened, which is horrible. The net sum is that the price of uranium fell by 89% over the following decade. 140 down to 16. And so now we see the next base resistance here, this kind of 8 years of sideways price action, which once again has just broken out. So look, the last time we had the breakout like this from the low to the high was plus 2,200%. You have to ask yourself, are we getting ready to make another move like this? Nothing is guaranteed, but this is a very good looking chart. And you overlay this for uranium with the fact that the production coming out of the mines has fallen by 20% over the last decade. And then if you understand that there are approximately 430 nuclear reactors in the world right now, and over the next 10 to 20 years, there are an additional 470 nuclear reactors that are proposed, planned, or in construction. So the usage is going to more than double. Where is the supply going to come from? Look, we turn to the uranium mining sector. We were just looking at the spot price of the commodity. Here is the mining sector itself. And I want to emphasize this right here. Very similar to the base breakout that we saw in the spot price. Look at this. Sideways, 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 a slight new lower low into the panic of the coronavirus. Sideways as a net sum for 6 years. This is called a stage 1 base. You then see the breakout. What? New high, retest, a couple retests, and we are now consolidating above the stage 1 base. Now, the peak from 2011 here that corresponded to the Fukushima disaster, I want to emphasize on the price chart, that was right here. So look, Fukushima 2011 was right here. If you were to go all the way back to 2007, we don't even have data for the Global X Uranium Miners Fund going that far back. But if it would be 400% just to get back to 2011 where Fukushima happened, can you imagine what this chart would look like if we get back to the 2007 level around $140 per pound? So, I mean, a reasonable person looks at this and says, well, there is a case to be made here. Population around the world is still growing. Use of fossil fuels is still growing. Use of electricity is still growing. Everything is still growing as a net sum. The world needs more energy. Is some of it not going to come from the uranium sector? I think it is. So, is there going to be a peak coming even higher than the 2011 peak? I would say the odds, based on the available data that we have in front of us, suggest that yes, there will be over the coming years. So if I was an investor at this point, I would be taking a very hard look at the uranium sector. Now, you have several options for that. You can look at individual companies that are producing uranium already, some of the large cap companies such as Cameco. If you don't want to do research on individual companies, you can look at this fund. This is the URA Global X Uranium Miners Fund, and I would argue as long as this thing is above the lower band here of the breakout above the stage 1 base resistance, which comes in at approximately 14, as long as this thing holds above 14 on any further pullback, I think this is a long-term buy on the Uranium Miners Fund. And I want to suggest one other possibility for investors who want much more leverage and are willing to commit a significant amount of capital for the opportunity to hit a home run. We are doing a private placement in the uranium mining sector. And so in addition to just buying those shares that you can buy on companies in the open market or the URA fund, which gets you a 1-for-1, when you get free full warrants for a uranium mining company, you get almost a 2-to-1 upside. So if you think uranium is going higher and you double the expectation for the mining companies via the warrants, you're getting close to a 2-to-1. This is how I personally am investing my own money into some of these private placements. I don't put all of my money into the private placements, but a significant amount. So we have a private placement that is open right now for a uranium mining company in the Athabasca region of Canada, politically safe jurisdiction, and the Athabasca region produces the highest grade, bar none, of uranium in the world. And in fact, it has the single highest grade uranium mine in the entire world. So we are positioning in the Athabasca region, and if this thesis happens at any point within the next 2 years with these warrants, you just looked at the chart with me, then we are going to be very, very happy about this. The deadline for registration, if you would like to participate with us in this private placement, is Monday, October 31st. I cannot make any exceptions for that. And remember, the minimum investment for private placements is $10,000 Canadian. So, want to thank you for joining this week. I think the uranium sector looks extremely strong from a long-term perspective. If you are a precious metals investor, if you're a commodities investor, and you're saying to yourself, well, I have enough precious metals at this point. Look, I understand. I mean, everyone reaches a point where they say, I have enough of one asset class. If you're the rare exception to that, then fine and bless you. But I think most people reach a point where they feel like it's time to diversify. I think uranium deserves consideration for a portion of your diversification. If you'd like to join us in that private placement, I said the deadline for registration is this coming Monday. And remember, that's the highest leverage you can get in the sector because you get free warrants. This also includes a free subscription to our precious metals intelligence service, which is going to cover some open market purchases that may include uranium stocks, just not at this time. Right now, I still do not have an appropriate stock in the open market. You have to take more things into consideration. For example, the amount of volume that is available in the stock. Right now, I feel like the best deal that we have is in the private placements. But if we do an open market in uranium, you will learn about that in Precious Metals Intelligence Plus. The plus is because we are obviously expanding, as you can see, to cover uranium and more sectors. If you would like to speak to me one-on-one about your exposure in the uranium market, the precious metals market, anything else that you would like my researched, independent take on, know that you can reach me in the consultations tab of the website. A number of exciting things coming up over the next few months. I'll have some details on that coming soon. We will get back to the precious metals, I suspect, next time that we meet here. Until then, thank you for tuning in. Think about how you as an investor want to position yourself, not just over the next year or two, but for the rest of your life, do you only want to be in one sector for the rest of your life? Precious metals are an extremely important market, and they are due for a reversion higher eventually. But should we not be exposed to diverse parts of the world? Thank you.